SoFi and Robinhood investors, beware right now. We're in a very crucial inflection point. The two stocks are up a lot, and I must analyze both for you in this video. I've recently covered both, but I have an update and more information that I need you to know because there are some mistakes that investors are making. So today I'm going to discuss SoFi stock, the business, the valuation, where I see it headed next, as well as Hood. What are the benefits of Hood and what are the problems? Because these stocks are not just angels. They also have some things that you should be aware of. Now, many investors are going to miss the boat on both of these, and that's a huge mistake because, spoiler alert, both of these stocks are very strong stocks, but I do believe that one has a bit more upside to go. Let's start with SoFi, okay? SoFi is an infrastructure play. Look at the stock right now. It's trading at $21.39, which is absolutely bonkers. It's absolutely stupid amounts of money. Ridiculous. You guys are getting rich, and I'm glad for you. If you're subscribed, thank you. I'm happy that we are making money hand over fist together. By the way, AMD, I called out many months ago. People called me an idiot. Take a look. All the stocks are up right now. So being a bull pays freaking a lot of money. It's just as simple as that. And I'm always, pretty much bullish, and that's good. It's been very profitable. And 43% is a whole lot of money to be made on SoFi. In the 6 months period, it is not as clear of a, it's not a 43% return, it's a 31% return. But you can see right now the momentum, and I want to break this down on the technical chart. I'm going to start off with the technical, and then I'll give you the fundamental valuation of the company. Look, we're headed towards we're at the top of the Bollinger Band, and it's a little bit crazy because the Bollinger Band was very, very tight. And interestingly enough, I said that this stock is going to blow up. This stock is going to explode. This is a stock that's going to grow in value because they have a strong business and the market cap is going to $30 billion. I said this when it was at $14 billion. Right now, let's go back to the market cap because the market cap analysis is also very important to understand. $23 billion, the reason why SoFi can go up a lot is because they're acquiring customers at a crazy fast rate. And even like Robinhood, the valuation on the market cap is $91 billion, right? So, I'm not saying SoFi is Robinhood. They have a different business model. One's a bank, one is not. But just from the user growth acquisition, this can be a stock that's $30 billion. And I'm just telling you conservative numbers. I'm telling you the near future. Of course, SoFi can be a $50 billion stock. So we still have a 2x potential from here. So if you're not paying attention, you're making a huge mistake. If you don't understand why SoFi is growing, then you honestly don't even deserve to be an investor. Don't just blindly copy my play, right? Actually understand why I like it. It's actually important for you. Just sit down and see why this is a good investment. SoFi is not like most fintech companies. They don't just rent banking infrastructure. SoFi actually owns it. They're the owner of the entire infrastructure. That's what makes this stock super undervalued, in my opinion, and also super powerful. So most fintech apps like Chime, Cash App, or even Robinhood, they don't actually have a banking license or any real core infrastructure, right? When we talk about Robinhood, I'll tell you which business model is more interesting. Is it SoFi Robinhood? But the most clear difference is that SoFi actually owns the entire banking infrastructure. They don't partner with third-party banks, right? But others like Cash App, Chime, Robinhood, they partner with third-party banks to hold deposits, to issue loans, to move money, and to handle compliance. Okay, SoFi, very, very different. I'm very bullish on it, and I hope that you're paying attention and listening because if you own SoFi and you hold the stock, there's just honestly very difficult not to make money over a longer period of time. So it means that other competitors to SoFi that are not banks, right? They have to pay a bunch of fees. Unlike SoFi doesn't have to do that. Everything is in-house. So SoFi is urgently benefiting, right now, they're benefiting massively from owning the entire infrastructure because every time interest rates stay higher for longer, and by the way, we're in a little bit higher interest rate environment right now. We're expecting some cuts this year. This actually benefits SoFi tremendously in the short term as well. That's why this is a very urgent short-term opportunity, and you're making a mistake if you don't have the proper amount of SoFi. Other fintech companies are still paying rent to real banks, whereas SoFi, they're collecting the full spread. They have a pure profit, right? So right now, SoFi's infrastructure edge is turning into an entire land grab because while other fintechs are stuck waiting on partner banks to approve products, SoFi's like, yo, come in right now. We got you. Come in. And SoFi's launching faster. Okay, faster is really a big benefit, right? But cheaper. It's faster, it's cheaper, and it's capturing more users in this high rate environment. I'm telling you, over the next few months, SoFi is going to make money. The business itself is going to make hand over fist, bicep over tricep. They got biceps that I can't even dream of, okay? And they're just dominating. And this also means that SoFi, I went to business school. I studied finance, economics, and business analytics / data science. Kind of the similar, right? Analytics and data science. And one important topic that I actually did during my thesis in my last year was competitive advantages. And the reason why I went over that in my business studies is because Warren Buffett says that what he looks for in an investment is a wide moat, and that's basically, he's just saying, a competitive advantage. A wide moat means it's difficult to disrupt the company. It's difficult to disrupt SoFi because SoFi is the disrupt. SoFi is the company doing the disrupting. Okay. By the way, I go into more topics like this in disruptive technology, in growing wealth, in compounding with the rate of interest that you need to compound your portfolio to get to retirement, option strategies, hedging, margin usage, and much more in my Discord community. One-on-one coaching right now is pretty busy, and the bootcamp is closed. But I encourage you to check out the first link in the description. Now is the time. I'm covering these stocks. We're making a lot of money on these stocks, and I've been dead on. I've been right on point with the amount of picks that I've made and the success I've had. So yeah, go ahead and join me if you like, but now is the time. Now is the opportunity when I am the most bullish, and I'm very excited about the profits that we've been making. Look, to wrap it up with SoFi, most fintechs really rely on patchwork of outside partners. Partner banks to hold deposits, lending partners to issue credit, third-party APIs for payment or compliance, and often really they have no control over the financial back end. What I like to see is a company that has good management, good control over their business, strong infrastructure, and it's kind of like, a play on words or whatever, but they have strong infrastructure, but they're also an infrastructure play themselves. Okay, so SoFi is very different. They own the entire financial stack. Their momentum is very strong as a stock, but as a business itself, the acquisition of customers, the cost of acquisition for acquiring customers, the upselling rate that they have, the conversions that they have, it's all off the chart. This is exactly what I'm looking for. So don't make the mistake of not following the momentum. I think a lot of investors, traders, they make the mistake of, like, when a stock goes up, they don't buy into it. The truth is, we don't really know the future, right? I'm doing my best to forecast, to analyze, but I'm only human. Nobody can really predict the future. Not Warren Buffett, not Michael Burry, not Mr. YouTuber, not Mr. Billionaire. Okay, so the smarter strategy is really to dollar cost average and to purchase shares even into strength. One strategy that I personally like to use is selling covered calls and producing income on a stock like SoFi. So again, that is what I'm privately doing, right? I can't always talk about it on YouTube, and I want to keep it pretty simple and straightforward for even beginners to understand. But if you're more intermediate or you want to get more intermediate, it's really through generating income. That's really the next step of getting wealthy and building long-term wealth, is generating income. Income is what we live on, right? It's cool to have net worth and a big portfolio, but if you can rely on income that's consistent, then you're free. You don't have to work 9-to-5 job. You don't have to be, even if you have a good business, etc., right? So when I see SoFi rising a lot, I want to say that a lot of people are concerned, but don't make the mistake. Just dollar cost average. Own the stock. This is a stock that will be a $30 billion company. This is a stock that has the potential to double. So that's a $40 price per share. And again, because their business is strong, understand the reason why I'm saying this is because they lend from their own balance sheet. They have the full margin capture. Okay. So when you lend from your own balance sheet, you don't have to pay fees left and right. You got the whole freaking pie to yourself. You got the whole pie, and you can entirely eat it. You just stuff your face with it. That's what SoFi is doing right now. They're stuffing their face. They're getting fat and chunky, but that's good. That's good. They're making a lot of money. So SoFi doesn't split profit with anyone. Every loan it's issued, it's 100%. 100 owned. So SoFi earns the full interest income, okay? And that's really powerful. There's no middleman, and it's faster, cheaper, smarter, no partner delays, faster product launches, and that's really important because they can innovate faster. They kind of operate in a way like a startup, okay? They have the tech company agility, so they're fast, they're operating like a startup, but they also have the bank power, so they can literally iterate. Okay, they can make many iterations like a startup, but operate like JP Morgan behind the scenes. So they got the best of both worlds. It's a very strong hybrid model that they have. So with that being said, let's move over into Robinhood. Let's do a deep dive analysis into Robinhood stock. I've been a user for a long time, since They launched back when I was in college. I've been using them. I think it was since 2015 or something. Look, the stock's over $100 per share. Robinhood is cooking. They are cooking. For breakfast, a lot of you guys have a couple eggs. Robinhood got like 8 eggs. They're cooking. They're flipping this thing. They got some avocado toast on the side. They got the whole freaking cake, eggs, French toast, avocado. They got steak. They got everything. They're feasting. They're cooking. Now, Robinhood, they just launched 24/7 customer support across all major markets. And this move targets a global, always on retail trader base. That means that all the active crypto traders that are in Europe, that are in whatever, wherever they are, right? In Dubai, now they can be starting to use Robinhood. Of course, it's mostly U.S. and Europe, so they're not actually in Dubai. So excuse me on that. So Robinhood now supports futures trading in the U.S. and Europe. Okay, this opens a new high-frequency revenue stream and competes with legacy platforms like Interactive Brokers. So those brokers better watch out. Interactive better watch out. Charles Schwab better watch out. Fidelity, you better watch out. You guys are getting disrupted. So again, here's a common theme, guys. You want to get rich? You want to be like Mr. Uncle Henry here, that, scaled his portfolio to 7 figures. It took a lot of time. Don't get me wrong. It took me a lot of time, a lot of hard work, right? I got my white hairs on my beard now. It takes time, but you got to be invested in disruptive companies. That's all it is. Be invested in companies that are doing the disrupting, not the ones being disrupted, right? Freaking common sense. Be in the company that is doing the disrupting, not the disrupted. All right. So Robinhood Gold subscriptions, by the way, they hit an all-time high. So recurring revenue from premium users means better earning stability even in slow markets. So look, what I like about Robinhood Gold is it's not expensive. You guys that are subscribed to Robinhood Gold yourselves, it's not expensive. But you know what? It's like a membership to Costco. What do I mean by that, right? If you paid for a membership to Costco, you're probably going to go to Costco very, very often. Robinhood, I think they're very smart. They're obviously very smart. And they figured out that if they get you on a cheap subscription like Gold, you're probably going to be locked in. It's like you got someone pregnant. You're going to have you're kind of locked in there, right? The same thing. They're locking in like a relationship. You can't get away easily. Mentally, you can't get away easily. Once you're in Robinhood, you start becoming a fan. Plus, their UX, UI, it's all very easy. So when I look at the valuation of Robinhood, right, I was telling you guys, it's at $91 billion right here. You can see, are we going to hit to 100? Of course. Of course we're going to head to 100. We're going to be over 100. The question isn't, are we? It's when. It's when. When will we be, right? So, my prediction is, and I see some analysts, we go down here to, they got the analyst ratings, right? Earnings have beat, by the way, multiple times. And the current price is 103. The average analyst is very behind. It's like Palantir when it was $20. The analysts were like, "Oh, we think it's worth $20. We think it's going to be worth $25." Like, bruh, what did you get your education from? I don't know what these analysts, honestly, these analysts, guys, Uncle Henry right here is your best analyst. These analysts don't know what the heck they're smoking. I don't know what they're doing on Wall Street, right? These guys are so, tough or bored on their job. They're doing drugs. I can tell you that. I can tell you that much. So I don't even, these analysts, they're so off on Robinhood. It's ridiculous. They're just off. The value of Robinhood for me, 100B. Okay, they got 100B. So, I think they're modestly going to go up. So, I said in the beginning of this video, what am I more bullish on? I am more bullish on SoFi. They have a smaller market cap. They have more room for upside. That doesn't mean that Robinhood doesn't have a lot of upside, because they do. The amount of cash flows that they're going into is insane. And I would not miss the expansion boost, because right now, until recently, Robinhood only operated, in like 6 countries, and mainly all that was coming from like really just US and, UK. But now they have an expansion boost. Okay, this is urgent, important information, because you can't make the mistake of not being in a company that is going through an expansion boost. That is the time. Like, this is the prime time now. So, they expanded into France, into Germany, and they're trying to expand into other EU markets. So that's kind of how it begins, right? Like, they're just expanding, but at one point, once they're in more of Asia, Middle East, it's gonna be insane. It's gonna be a ton of money. They're going to be printing it, okay? So it's a mistake to not be invested in a stock that is expanding geographically and has so much tailwind, right? So demographically as well, so geographically, demographically as well, Robinhood's new identity is really the fintech entertainment. It's kind of sad to say because money is like, guys, money is, it's hard to come by. It's not super, what I'm trying to say is money is not easy, right? Getting rich isn't easy. It's a lot of effort, and every dollar is valuable, obviously, right? But Robinhood is going for the gamification. They're going for fintech entertainment. So it's a little diabolical. It's like a casino. Robinhood isn't just finance, it's financial content. It's trading, it's social dynamics in a way, because they're creating games on Robinhood. Their mobile app now features creator-style investing insights, leadership boards and trading competitions, social watch lists, copy trades, and all this type of, the direction that they're going is the addiction direction, which is, look, hey, I know a lot about marketing, finance, economics, and the addiction angle. It's diabolical. It's freaking diabolical, but it's strong. You know, addiction, like casinos and all that, they're gamifying the app. So this is some stuff that's going to get people hooked. Some people are going to make a lot of money. If you're following me, then you know I stick to the safe passive income. But it's going to also get a lot of people hooked into more gambling. It is what it is, right? I don't advocate for gambling. I'm all about putting probability on your side so you have an edge. But many people are going to go in the app, have fun with it, and Robinhood's going to generate a ton of money in fees. In general, I like the business model that Robinhood runs more than SoFi, though. So if you ask me which business model is better, it's Robinhood because they have a low-risk financial model, right? They're low-risk business. So unlike SoFi or traditional banks, Robinhood doesn't carry any credit risk, right? So there's pros and cons. They don't carry the credit risk. They don't have loan charge-offs or defaults. They're just in the middle. They're a middleman. So if we go through some type of crisis like a 2008 situation, I don't see that happening, but SoFi would be in a lot of trouble, whereas Robinhood would be in less trouble. That's my personal take on these two stocks. I am pretty bullish, and if you subscribe, I will keep making videos on both of these stocks. But also, I do encourage you to take the leap of faith in me and to, just look into my Discord community. Right now, it's the best time for the second half of the year. We're going to make a lot of money. I can accelerate your wealth, help you learn from a beginner angle. I do focus on beginners, just to lay the foundation, the groundwork for creating real wealth in option trading. So join me. It's the first link in the description. Either way, I am happy that you made it this far in the video. Let's make some money. Let's make bicep over tricep money. And thanks. See you in the next one.